Hi guys, we're here with Uzair Qidwai, the CEO of Cent Finance, and is a very cool new project that he's working on as well with his decentralized exchange. How are you doing today, Uzi?
Hi, Rob. How's it going? Hi, everyone. I'm doing fantastic. Thank you for having me again.
Awesome, it's great. Always a pleasure having you. So we're going to be dividing this up into little portions. So just so people know, we're going to be covering smaller topics, little maybe bite-sized videos, right? So the first video I think that we're going to cover right now makes the most sense is kind of just like a brief introduction to DeFi, right? Kind of telling people a little bit about what it is maybe that you do, but also more specifically about DeFi and kind of where it is, right? So
Yeah, right.
do you mind answering a question? So could you briefly explain kind of what DeFi is? You're the expert here. Could you tell people a little bit about what it is and why it matters?
Yeah, so DeFi is short for decentralized finance, and the term is currently used collectively, and it loosely refers to the technology that's being used to build the new financial infrastructure. So that covers blockchain, decentralized applications, and ledgers, digital assets, and everything within the blockchain space that's being used to build new infrastructure for financial services and transactions.
Awesome, very cool. So basically reinventing the world of finance, right?
Yeah, you could say that.
Yeah, basically, right? Cool. So how does this DeFi, how does it compare to traditional finance?
Yeah,
Right?
no, that's a great question. So DeFi is essentially a decentralized version of existing financial infrastructure and how transactions happen. So in decentralized finance, there's a few principles that you'll always find. So typically it uses blockchain in some way, so that makes it consensus driven. So it's not centrally controlled by one party, but multiple parties have to agree to a transaction. One of the key properties of blockchain. Another key principle with DeFi is that typically it's permissionless, so there's no intermediaries, which again, is very common in centralized or traditional finance. And it's mostly software driven, so it removes a lot of human bias and makes things a lot more efficient. So yeah, I'd say those three key properties make decentralized finance a lot different than what we see in the traditional world.
Interesting. So that's what makes them different. So I'm thinking about how does this make them better in some ways as well, right? Because different is one thing, right? But like one thing I know from what you just mentioned is like, because it's software based, because there's no intermediaries, it'd be cheaper, right? What other ways do you think compares on like this more macro or result kind of
Yeah, so one of the key things in finance has been transparency. So the more information you have, you're typically in a better position to make more informed decisions. And with the nature of blockchain being completely transparent, DeFi presents an opportunity for people to have more equality. It really does promote that whole idea of symmetry of information between different financial market participants. And when you have asymmetry of information, which is the opposite, you see people getting exploited and taken advantage of. So DeFi eliminates that. It also makes things a lot more efficient. So typically that leads to savings of cost associated with transactions. By removing intermediaries, it again removes spreads that these intermediaries would charge, which would again lead to higher prices and transaction costs for people that are trying to move assets, for example, from one place to another, or simply just purchasing an asset. So it makes it quicker, less expensive, and just generally more transparent for people.
Yeah, it's definitely, it makes a lot of sense. The transparency thing makes a lot of sense too. I know banks use a lot of information to make themselves a lot richer at the expense of people sometimes, right? So it makes a lot of sense.
Yeah, you could think of it in the sense that it's an open database where you could query every single transaction that has ever happened. So it's not partial transparency or an improvement on transparency, it's complete transparency. And that makes a huge difference.
Yeah, for sure. So you know where the money's going. I feel like that could lead to some very interesting things happening in the world, getting more transparency into transactions overall. Lot of implications there, right? Cool. Okay, so we're talking about versus traditional finance, right? So so are institutions getting involved in this? Because we're talking about DeFi could potentially replace maybe some banks or something like that. But I've also heard that they are getting involved in it, right? So how are institutions getting involved in this, and how do you see that playing out?
Yeah, another great question, Rob. So one of the most common ways banks and traditional financial institutions are getting involved is through internal blockchain pilots and programs. Some have gone further. For example, JP Morgan built their own blockchain called Quorum. Others have said publicly that they're not supportive of digital assets, for example, Goldman Sachs, but then they go out and set up trading desks for digital assets and becomes one of the most sort of, I guess, fast growing areas within the bank. And so we're seeing that not just from investment banks, but also asset management firms. Fidelity recently announced DeFi projects. You're seeing regulators and governments launch their own currencies and blockchain-based financial infrastructure. So everyone is getting involved regardless of what they say they're doing or not. And this, again, goes back to that whole idea that in traditional finance, institutions are plagued by this problem where, one thing is being said, but something else is actually happening in the background.
I feel like that's pretty typical of these big banks. I think part of it is, maybe there's some underhandedness, maybe not, but definitely part of it is they're just such large institutions, right? That's like kind of hard to, I think maybe the CEO doesn't even always have full control over what's going on there, Cool, awesome. So, okay, so those are institutions like banks and things like that, right? So there's also this term that you taught me, actually. It's CeFi. There's a new term for me. I think this has to do with, maybe you could explain actually what CeFi is a little bit.
Yeah. So CeFi, similar to DeFi, is again a term that's used loosely to refer to centralized exchanges or custodian-based providers of digital asset services. So companies like Binance or Coinbase that take custody of your digital assets, they're called typically CeFi companies. And how they're different from DeFi is that CeFi companies will usually process digital asset-based transactions in a centralized way. So all they're doing is they're taking blockchain technology, but they're using similar flows and models to how things happen in traditional finance. DeFi changes that because it changes the centralized model of having one custodian or having one intermediary control everything into a more peer-to-peer network-based model where you have different sources providing the same resource or different sources initiating and completing transactions. So it's a more mesh-style network-based infrastructure.
Okay, that's also kind of what you guys built, that Cent, right? This is part of what you guys done.
Yeah, so real quick, Cent is a non-custodial DeFi wallet, which means that if you use Cent to buy your crypto, you remain in full custody of your crypto. So you're not storing it in an Amazon cloud account somewhere in their one of their databases in a data center somewhere. It is essentially held on your device. So if you buy it on your iPad, your crypto is stored on your iPad. If you're using a mobile phone, it's actually stored on a mobile phone. The benefit of that is that instead of having millions of dollars of worth of crypto in one location, which then becomes a honeypot for hackers and malicious attackers, it distributes it based on how much you have as an individual. So instead of having to worry about, will hackers be able to get into my AWS server and extract millions of dollars worth of crypto. And we've all heard and seen these kind of stories come up in the media every now and then. DeFi completely, yeah, exactly. We've had Quadriga X out of Canada, where we're both from. We've seen other exchanges in other parts of the world have similar issues, because if you're going to have a gold mine of crypto somewhere, then of course hackers will go after that. When you remain in self-custody of your crypto, you have the option of putting it on a hardware wallet. You can store it, in a cold wallet, which means in a separate device that's not connected to the internet. And so there's a number of different solutions helping promote self-custody options within blockchain and crypto.
Okay, interesting. Yeah, so that makes a lot of sense. And then you guys also, you've created this decentralized exchange as well, right?
Yes. So Cent is our non-custodial DeFi wallet, which I mentioned, allows you to remain in custody of your assets, but that's of limited use unless you're a buy and hold investor. So for people that want to be able to do more trades, let's say invest in index funds or be able to do swaps at low prices with other crypto assets, they can use our decentralized exchange. It's called Symmetric. And how that's different from traditional exchanges is, in traditional finance and in traditional exchange, you'll have an order book where buyers and sellers put in bids and quotes, or asks rather, for different assets. And then the order book essentially drives the market. In DeFi, instead of having an order book, you'll have a pool of assets. So you'll have an X quantity of crypto asset 1 and a Y quantity of crypto asset 2. And their relative pricing sort of determines what the end user pays. But the benefit of that is that when these pools are created on a decentralized exchange, it allows people to swap their crypto assets from one type of crypto asset to another without any intermediaries. And they can see, before they process the transaction, what the market impact would be, how much they're going to end up paying, and how that compares to traditional alternatives. So it's a very interesting way of allowing asset exchange using an exchange-based model.
Okay, cool. So correct me if I'm wrong, and kind of like my thoughts is like, we have traditional finances like the banks, that sort of thing, right? You could trade around dollars or stocks or whatever, right? Then you have CeFi, which is a centralized exchange that can trade crypto assets, right? And then you have DeFi, which is you're trading crypto assets in a decentralized fashion, right? Is that like a good?
Yeah, that's very, very well put, Rob. That is sort of the scale of decentralization. So you have the most centralized players in traditional finance, as we see. And then as you incorporate some blockchain and digital asset technology, you go a little bit further away with CeFi. And then when you get to DeFi, it gets completely decentralized. Now, of course, one of the challenges that leads to is that blockchain-based technologies are typically anonymous. And so regulators have a very hard time regulating activity, which is one of the shadow sides of anonymity and decentralized structures.
Yeah, for sure. Okay. So I think that's probably a good cutoff point for this video. I think a very good segment for next video that we're going to get into, which is about kind of what the shortcomings are and whatnot. So I'll see you in the next video, and talk soon.
Thank you very much. Bye, everyone.